It's our, here we go.
All right, awesome. June 20th, another Prospero weekly update. This is a special edition. Things are getting hectic, but we made it, and we're ready to talk about some stocks and some macro and a little bit of everything today. So, where do you want to start, George? Tesla?
Yeah, let's keep going on Tesla. When I glanced, it was up pre-market. We're going to talk like a little bit more for those that don't know and that are just here. We're going to talk a little bit about our model portfolio today and kind of update it in real time. I did see the rest of the market was a little down, so it'll be really interesting actually to talk about how I think about that. But let's dive into Tesla. It continues to be at the top of our net option sentiment, which is obviously something that we think is very important and obviously a pattern that we saw earlier in the year when it was up kind of like even 70% when it was fixed at the top of our scale. And it's been pretty fixed at the top of our scale, so 100 rating, and we're basically putting things pretty souply in the newsletter this time, saying, as long as it stays pretty close to the top, and I would say anything above like 95 would be just like a straight bull signal. In our newsletter, we say anything greater than 85 is good because that's kind of like the bull bear area. But yeah, it's at least watching a little more closely if you see it having some sustained readings of net option sentiment below 95, because it's been pretty fixed at the top there. Like, in the graph I shared this week in the newsletter, like it had a blip down, but since the scale is so high on the graph, the blip down was only to like 97. So we're feeling really strong about that. Obviously, this time it's been up almost 40% since it's been kind of in this like flat line at the top of the scale. And obviously, we talked about that in upside breakout with Meta, and Meta's been up over 50% since it's been 100 in upside breakout, which, as a reminder, is a long-term signal and focuses more on the long-term options markets. Tesla is a max in net option sentiment, which is more in the short-term options markets. But it's really cool that like right now, the two stocks that are kind of fixed at the top of our scales are in those metrics respectively are in these great runs.
And would you say Tesla is probably the number one stock, or is it still Meta in the Prospero system right now?
Depends. I think if you're a short term, it's just the difference between those ratings. If you're a short term trader, I would say Tesla is more interesting right now. If you're looking at it more long term, I know a lot of people, our videos don't do as well when we talk about Meta, but I think that's actually like kind of a lesson. People are undervaluing it because they don't like the company. And I don't, I'm not the biggest fan of Mark Zuckerberg, but I don't dislike him enough that I'm not willing to make money off of his company. And that's kind of like the attitude of a value investor. And why you're looking at a long-term signal. I think people are I think they just announced, I forgot their product. But I think they just announced a new generative AI product that they're putting in beta.
Obama?
Yeah.
Yeah.
Yeah, it looked pretty cool. And so, yeah, as I've pointed out in this a number of times, like you might be missing the boat on Meta as a huge generative AI play, which is actually an interesting story about uh, graphics cards and how they became neural net processors. Actually, they became like all this GPU processing did not originate or these graphics cards that are now used for these, deep neural networks did not originate for that specifically. It was actually that video game universes were so complicated. Actually, to run these video games, you needed a pretty complex like matrix multiplier to actually run these simulations and build these worlds. And that's kind of just like a really good story about how you have these, you might have these alternate purposes for building things. And that's a good example of like Meta and the metaverse. Like, that might be useless, but all of the technology that they built to like simulate these worlds, and even the R&D involved in that, and maybe actually putting together worlds like on the fly, is something that obviously, in addition to their excellent training set and all the conversations they have, makes them a generative AI play that's underrated still, I think, and not properly valued in to what it could be. It's still like much cheaper than the other, I've talked about this before, and like people are basically pricing in Microsoft to beat Google right now. Microsoft is trading at about 30 times forward earnings and Google about 20. And I think Facebook is even lower than that. I think I only know its current PE, which is closer to, I think, to like 16 last I checked. I imagine its forward PE is even a little lower than that. So like as a generative AI play, Facebook is actually trading at a discount to the others, and I should update that forward PE now. We can probably even get it after the video. Um, but yeah, the one other thing I wanted to say about Tesla that I forgot, and speaking of, why it might keep growing and why it's like, and this is, I think, a good discussion of value that I brought up in my newsletter, which is, um, I never think you should underrate growth. Like, and the thing about Tesla, and people say it's always expensive to what it's trading at, and people will also say like, it's a battery company too. It's got all these additional things, but the first thing is, I think, you might call it the Musk factor, which, when we've talked about this, is that self-driving cars, like, it's regulations that are the main obstacle and them rolling out now. And like, in the concept of regulations, like, Elon Musk was actually like I believe the first person, I don't know if people did this on a smaller scale before, but on a large scale, to basically be allowed to sell directly to customers, Teslas. That's one of the reasons it can do so well as a company. And he brokered that deal. So, I think it's something that it's very powerful to say, like, hey, if anyone can get this kind of thing done, where self-driving cars are on the road and they're getting that like ARR from the, AI, it might be him. And that might be a reason, like, one reason it might be still like undervalued is that might happen sooner than people think and really start to boost up revenue. But the other things that, like, actually, as I've been digging deeper into Tesla, and I've actually been speaking on some spaces, and I've learned there's some great people analyzing. And I would suggest, if you're on Twitter, to check out Wolf's Twitter spaces. Like, May Musk showed up to the last one, and then this guy who autobiographied, I forget his name, but he was the biographer of Steve Jobs, and now he's writing one on Elon Musk, and he just showed up. So like the Tesla spaces, it was a bunch. It's actually the one, I even got sat down as a speaker at some point, which they never do in those, but they needed to make room. I wasn't offended when I see who they were bringing up, and I'm by no means a Tesla expert. I'm more of a generalist, but as I dove down deeper, I also think, when you look at like value versus growth, like, yes, traditional value says like it might be expensive now relative to its peers because it's all like relative or relative to other countries, companies. But the big thing about it is like, you do have to scale it against like, non-traditional things, like the fact that there are multiple businesses, like we said. But the other thing that is, like, I would say, of particular importance with it, and like when I heard this, I was like, whoa, I didn't realize that. I kind of knew it. But like, you look at the rest of the self-driving cars, and they actually use LiDAR, like the spinny thing at the top. But the Teslas actually use a complex computer vision algorithm. So they're actually like running on lower tech. They're cheaper to build for that reason. So it's just like one of those things when you hear that, you're just like, whoa, like they are, actually using a lot of AI already. Like, the only reason you're able to build a computer vision algorithm like that is like you've tested so like profusely your algorithm. And like a short lesson in AI and machine learning, for those that don't particularly understand, is that, in a brief history, basically, the first AI was actually like, by some definitions, a spell checker, because it basically had to figure out, what you meant when you were typing close words. And basically, that was not pre-programmed. It was kind of like some situation, some logic, that was able to just like kind of like do a close match, but do it like intelligently and like learn a little. Obviously, of those and some of the characteristics of AI that people say that might not be some classic definitions, but essentially, for a long time you basically had to program all these rules. So if you were like using the old way, like, before like literally machine learning, and I'm giving a little story about what it means, like when you're doing the old way of programming, you were basically looking at something like, um okay, I have to look around. I'm a car. Like, these are what a dog looks like. And you're literally like programming in like the dimensions of a dog, and then, honing it. Just like, it could be all these dimensions. It's got like its nose looks like this or like this. Or like, and actually, people, that's how they built systems before. You basically like, you built rules. If they failed, you built more rules, right? Machine learning was the first, like, when they crossed and it became more popular. Machine learning was when, instead of that, you would just show it a number of pictures of a dog, and it could learn. So you weren't programming that. You were just like feeding in these pictures. And especially if you look at computing getting faster and faster, like, we've talked about Mu Zero and Google before. And like, actually what Mu Zero is doing when it's like learning is it's actually like like you might say simulating, reading, whatever you want, like millions and millions, maybe like hundreds of millions of games of chess or Go. And so that actually was done in an hour, basically, because of Google's unlimited computing power and like the speed and basically everything like that. And we're not even getting into quantum computing, which there's an interesting Black Mirror on, actually in the newest series, where it's going to get like even faster. But there's actually a thing called a GAN, which is like a generalized adversarial network. And what that actually does, and that's like more of like the bleeding edge, that actually creates synthetic data on top of it. So basically, like, actually does the reverse. It creates a bunch of fake chess games that didn't exist off of the real chess games, and then see if those fake chess games like actually like are predictive. Because it like hides part of the data and it like of the formula that it doesn't actually know is like the winning formula. So those are very interesting, but like, that is all to set the stage a little bit where it's just like, yeah, these other companies that are using this LiDAR don't trust their algorithms enough, and maybe they're just not good enough to, basically understand the world well enough versus, Musk's, which are lower tech that just like they're basically pre-programmed with this logic. And part of that is like you can train an algorithm and then just like obviously like push it, and that's like the software that they have. But once it's pre-trained, it actually understands that world pretty well. Um, so yeah, so basically they just like after a model's trained, it's easier to run the model versus train is much more computationally expensive. So that's why it's not like confused down the road because a lot of the actions are basically pre-programmed and pre-understood. You can think of it as like one big equation of how to understand the world. And then it's just, it's printing the answers for that equation instead of like trying to understand it. Um, but yeah, so like that is a powerful that speaks pretty highly of Tesla as an AI company. And like one of the things that they're just like, wow, how you can look at them as really like a, perhaps a transcendental technology going forward. And like, that's why when people look at it and say, you know what, I think it's going to grow a lot more. That's the one example I said in the newsletter. It's just like, yeah, something could be both like overpriced by traditional value metrics and me just being like, no, I don't think it's overpriced. I think people are actually undervaluing exactly all of its technology and how much revenue it's going to bring. And I put that in quotes because, like, the big debate in value investing, and I've talked about it before, is like how much growth is already built into the stock. So people say, oh, it's priced in already. And I don't think it's priced in based on like how much and how great their technology is and Elon Musk's ability to just like get technology out to the world and really work the government. He's like very, very good at that, or even like international governments. And I think case in point of that, and like one of the reasons I was just like, I have been a little maybe more bearish on it happening, but he actually got like all of the car makers to come to the table and agree to his like charging standard. And like that's incredible. Like phone companies can't even do that. And it's like so much more obvious for them. Like car companies like don't want to help out Elon Musk. They're their competitor and they're literally like handing him money because they agree his charging standard is better and he somehow convinced them to do that because like some places are stubborn and they won't do it. They'll be like, even though this charging technology is better, we're still using ours. So yeah, I think we're more limited on time today, so we might have to breeze through some other things.
Yeah, and I just wanted to say, like, and you think about how he has SpaceX, Neuralink, and all these other companies. It's like, where does this guy find the time to work on all this stuff? It's insane.
Well, what the biographer said is he just like works all night.
Works only, yeah. Yeah,
Yeah,
probably.
and he was like, I went to sleep at like 3 a.m. and he was still going sometimes, and then he would like go out and like go out after that. So yeah,
Can't
the
wait for
guy's a
that.
machine.
That's gonna be
Yeah,
awesome.
yeah.
Um, Another other thing I wanted to say is that if people own Meta or are interested in it, Mark Zuckerberg just sat down with Lex Friedman and did like a 2 or 3 hour long podcast, and I watched it, and it's really interesting. So if you're interested in Meta, you should watch that, and you'll find it fascinating. But last week there was a lot of macro events that happened with the Fed and everything. And what is your feeling after all that's played out?
Yeah, I mean, I think it's very interesting because we've been talking about this, and they were pretty sure there was not going to be a rate pause, and now they're forecasting a rate pause for like the next some probability of the next two meetings. I think it's like 60-70%. You could probably pull up the live look, and I don't think that means both, but we'll see what he said, what he says. And yeah, I mean, I think they're just reserving the right to increase it again. if things don't go well, but it might keep going well. And I mean, I think basically what we're seeing here, and like I talked about it, and I was one of the people that was like holding out and being like, oh, we might still go bearish, but like as it went, like I think, what I'm settling more and more on is like, yeah, like the S&P 500 might be bearish, or might, take a hit, might be like a little less bullish. But this tech stuff is just like, it's way too exciting. Like people are basically like, turning around on some of the short positions on these things. We just saw SPY net option sentiment last year, basically last Friday have its best day of the year. And I said this, like it's crazy. Like of the readings above like 32, where it finished the end of the week, and keep in mind it's at zero a lot this year. Um, Definitely more time at an exact zero value than above 32. And it had 51 of its 152 readings on Friday above 32. And then there was a day 322 where it had 41 readings above 32 for net option sentiment. And it's been up 12% since then. Even the SPY, that's like, been not as good as QQQ, obviously. So yeah, so I think it's like it flashed a very good sign. As I said, I think like, the big tech should carry the SPY somewhat. But I think we still have these credit worries. We still might have a crunch on spending due to like, ongoing inflation, and especially core inflation is kind of staying fixed. But yeah, I think the market is telling us pretty definitively that they believe in the long-term story of tech. This is not like a little run. Like there's been, there's about to like I actually wrote in my newsletter too. Caleb Franzen is a great like macro. He's a great kind of technical macro guy. And I posted a link in my newsletter. And like, yeah, he said we might flash a signal pretty soon. It's just like a very, very bullish signal for the QQQ, and the SPY is looking like that. So yeah, at a certain point, like you just have to you got to zoom out and say, hey, like, there hasn't been enough of a correction here to say that the market isn't long-term bullish, especially in tech where it's like carrying some of this. But I think, as I've said, we still have to watch out for like, some of the names being down. And I think, that was one of your other questions to me as we were like talking about this. Like, I also just don't think because like a name is down that it's going to catch up. Like some of these names, to your point, there might be like kind of pretty like there's some assurance the other way in the market that people are pretty confident that these stocks will get hurt, like the way the economy is going. So I think there's going to be haves and have-nots, and like we said, I think it's the beginning of a major trend where tech, might be, cutting headcount because of AI and putting up new revenue streams, like, obviously raising revenues and cutting costs. So yeah, it's like it's one of those things where, you really have to like sometimes you just have to like accept what the market's telling you. And like, what I said in my newsletter, I think it's very important. Like watch out for corrections. Like in any bull market, there's still bear runs. It doesn't just mean it's going to be like fun and like, the bad times are over. You still have to be careful. Don't bet too much in the short term, but also just like don't get scared away from your longs at this point. Like I think now is the time to like get your longs, hold them, it's not guaranteed that it's going to be up, but it's the kind of thing where it's just like you don't want to miss the upside. And like you can, at this point, you might still see some downside, or you might still see a hit. But like this is the time to like buy QQQ and hold it for 5 years, and then just, see how happy you are. Or even like well, TQQ, you're like if you're gonna hold it, you're gonna get fees more, but you could get leaps on it because you're not actually owning the stock and seeing as much of the, fees. Obviously that gets priced in to an extent, but like, yeah, like maybe just buy some leaps on TQQQ and like, as far out as you can get them, and just be happy about that now. But you might take a short-term hit. Like you can never time the market perfectly.
So it really sounds like you're talking about a roaring 20s type of situation where you just buy the dips.
Could be, could be. I mean, I'm not ready to like say like I'm not sure I'd like load up on every dip, but I'm saying like, hey, the portfolio that you keep in like longs that you're holding, it's time for that. That's how I'm dealing with it. I've started to get into. I started buying some leaps myself. And ENVX, oh, we brought it up like it was up 10% last Friday. I think you could probably look back to our video when we first talked about it. I think it's up almost 20% since we first talked about it as our favorite small cap. That's the one that I might buy today. If you're just like, hey, whatever, like it's like there's going to be a lithium shortage. There is one. It's going to start coming through in the price of batteries. They have what they're bragging about is better tech. They made a big announcement Friday, which shot the stock up 10%. I've been on it. I've been loving it. ENVX.
Ollie and VX. So do you want to touch on IPOs quickly right now?
Yes. Yeah, before I transition to my phone broadcast. So yeah, I would say that, one of the things, what was one specifically you wanted me to talk about? I think it's just
Uh,
like,
Kava went public last week.
yeah, Kava. And I think that's a really good example. And so like IPOs traditionally, and I was having, with one of the people that like one of the retail investors in my like tighter circle that I just actually ask about a lot of stuff and take their take and they test Prospero early. Um, he was talking about getting like an insider take on one of the IPOs. And I was like, well, IPOs always you got to do with a grain of salt. Like, like they do kind of always go up, but I was like looking like traditionally, they go up way more than they go down, and people just want to flood in. But it really depends on the market. Like bear markets, IPOs can actually be bad, because a lot of their pricing models and like if there's one thing about finance is they can be very stuck in the past sometimes, especially if like bankers who don't have like the same kind of quality of models as say like a buy side hedge fund. So their models might be a little stuck in basically projecting numbers that don't fit. So like yeah, during this bear market, IPOs have been like down more than up. But traditionally, that is not true, and IPOs just like generally go up. But what I would say is that like IPOs, you might want to watch because it might turn, and you might actually have people being behind now, where like people are kind of like scared away, they go down a little bit, and you buy the dip. Maybe set like a limit buy, like 20% below, and say, hey, it's time to buy. It's time to buy IPOs at 20% below, but keep an eye on them and you can actually go and grab the data of what they do. You can say like recent 100 blah 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 IPOs, and it's really easy. Like, I can even share one next week. We can share it in the chat of like I can do a little IPO analysis. People might like that. And maybe I'll put in my newsletter actually. Um, but yeah, like I would say like bear markets are not good, and like yeah, we're coming out of the bear market, but it's not like the classic definition of hey, like the S&P 500 is up 20% from a low. That's not necessarily like yeah, that's like the classic definition, but it doesn't necessarily mean like oh now IPOs go up. Like sometimes like certain signals are different than others. And like one thing that we absolutely saw, and like I think that's part of it, is we did see a lot of these tech companies just like plummet in valuation. That like I think someone said of like the major tech companies that have IPO'd in the last like X years, Airbnb is like the only profitable one. Everyone else is still losing money. Um, so like one of the things that I'd say got refocused is people were just like, well, like are these real businesses? Like, so I think that's part of it. And some of these things have just like built on just being like what not making money basically and just like growth is like a really like it's like a really interesting part of the story. And I think that could be part of it. So I would say with the caveat, like you can look at their financial statements. If you see an IPO that's like, trading at a good PE, like go look up the industry, like look at what the industry PE is, and if you see it trading at a good PE for that trailing PE for that industry, and it's going to say TTM there for those that need some of the terminology, that means trailing 12 months. Uh, you know, I'd say that's safe to buy right now or great to buy right now because people might be undervaluing the overall market. But yeah, you might want to stay away. I would say the star has fallen a little bit on companies that don't make money, and for good reason. All right, I think we're transitioning to the other way. I'll be right back on my phone.
Okay, see you in a minute. All right, so I'm the sole host. I don't know if we're still live, but George is a busy man, so he's got stuff to do today. So he's moving from his laptop to his phone, and I think he'll be in the car next time we see him. So, um, yeah, that's what's going on there. And I don't know if I've ever properly introduced myself. So my name is Stephen Foster, and the way me and George first met is that I just reached out to him one day on Instagram actually, and through Prospero, I interviewed him on my own channel, and then we stayed in contact, and he invited me to use the app, and I kept using the Prospero app, and actually liked it a lot. So then I reached back out to George, and I was like, "Hey, I love what you're doing. I love the whole Prospero mission. I think we should like collaborate more, work together." And we came up on this process of filming a live podcast every week. and it's been going great so far. I'm thrilled, and I hope you guys are enjoying the live podcasts and the shorts that we put out of it. If anybody's in here and has a question, I know we don't have a ton of viewers, but we would love to answer anything you guys are curious about and give you some value and help you out. So I think I see 4 people are in here right now. If anybody wants to say anything, go right ahead and jump in. The market is about to open any minute, so we'll see how it opens today. I think it's down right now. Let's check. Yeah, I'm seeing down like a quarter of a percent for most markets, but yeah, George seems to be very bullish recently. All of his newsletters and all of his updates, they're sharing how bullish the Prospero signals are looking, especially big tech. It seems like big tech is really the place to be for the past 6 months to start the year, and looks like going forward too. So we're gonna do something really interesting. Prospero just released a model portfolio, and I believe George is gonna take us through it live on stream. So that should be really fascinating to see. That I don't know what else to say really. Let's see how the market is. Okay, let's check in on the market. That's what I'll do for you guys. I'll give you some live updates right now on the market. Okay. So, okay, everything's down. Here's a stock that's interesting to me. Now, this is not any advice by me, but Disney, I looked at Disney myself, and Disney has been down for the last 8 years. If you go back to 2015, Disney stock is down today from where it was then. Just a brand name that's interesting to me personally, that the fact that it's down for that long. Okay, so the Dow is down 0.54%, QQQ down 0.36%, and SPY down 0.5%. So down across the board to start the day. What else? What else? Any questions? Let's see if we have any questions. No questions. No questions. Yeah, this is a bit of a unusual live stream for us. Usually we're Mondays at 11 a.m. and if you guys are watching and you like what you've seen so far, you'll going forward, and for the most part will be every Monday at 11 a.m. going forward. And then you can follow us at Prospero.ai on Instagram and TikTok, and we post short videos from these live streams on there. So if you guys like the content, but you don't have like an hour, however long to watch the full thing, you could just watch us on there, and that'll be where we set out like 4 or 5 a week, the best clips from these live streams, and we post them on there. Let's see, let's see. I'm pretty interested. I kind of wanted to ask George a little bit more about the IPO, what his opinions were on IPOs. We got cut kind of short because he had to transition, but I think it's really there needs to be a bigger conversation about like how these all of these Wall Street banks and big investment firms, and they get into the stock before it goes public when retail has to buy the stock. And I was watching Kava last week, and I believe earlier in the week it was going to go live at I think between $12 and $14 per share. And then by the time, what day did it go public? Thursday? It went public towards the end of the week. In the morning on the day it went public, it was showing like $20 to $22 per share. And then by the time it actually went public, it was over $40 a share. So all of these banks and investment firms and Wall Street that are insiders got to buy it and double their money instantly. Now I'm pretty sure there's some kind of rule where they can't sell it for 30 days after it goes public, but still, it seems like a pretty good deal. Oh, it looks like we have George back. Let's see. He's gonna be. Oh yeah, there he
All
is.
right. I am back on the road.
Looking fresh too.
Yeah, going to this meeting. We'll see. This is not going to be our finest. We got the sun in the background. I don't really know what I can do about that, but we're gonna power through.
We're making it work 100%. And I've just been rambling. I've told my backstory a little bit. I talked a little bit about how the market was opening, but yeah.
Oh man, how is it opening? I didn't get to look. I was running out of the house.
It's down. The Dow is down the most, and QQQ is trying to go positive right now, just like always.
Oh, nice. Great. So do we have more topics or should I just jump into like the what we were talking about on the live stream?
If we have time, I wanted to ask actually one more question about the IPO stuff.
Yeah, I promised to start doing the model portfolio at in 6 minutes. So we got 6 minutes before my commitments begin.
Okay. So I kind of said it while you were gone, but I have one like question or more of it's like a concern with how Wall Street is constructed right now, where all of these banks and like Wall Street big firms and stuff get to buy the IPO stock. Basically, I remember seeing Kava last week, it was $20 to $22 a share in the morning, and by the time it went public, it was $40 per share. So do all those people who get in before it actually goes public like double their money instantly?
Yeah, but I can tell you I can tell you like the dynamics of IPOs and how they work. And like actually that's a really good question because there are some changing dynamics there. Um, Essentially like when you go like Wall Street is kind of like it's kind of like a Wall Street ransom to price your stock correctly and like get it out to the right people. Basically like how investment banks get paid or part of how they get they around for free. Like that's how they pay themselves. They pay themselves handsomely, and part of that service is they have people buy in at that price. So they go to institutional investors, and they definitely want institutional investors. Like the thing is, like nobody realizes that gain immediately because you're going to have a hold period. They go to people that they think are good matches, and they'll like test the waters. They'll test the waters on like the valuation model that they build, and yeah, like it's really just a question of like there's a couple levers they have to worry about. The first thing is like, yeah, like a lot of people are making these big profits, but like if you price like companies will get pissed off if you price them too low. Um, but like it's all just like it's kind of a weird thing because it's kind of they might be actually angrier if you price them too high because companies like just care about the market value of the stock. So companies don't necessarily really care if like it's priced too low and it goes up like gangbusters because they only care like about like the market value of their company and the higher the stock it's better. It's kind of like if a realtor prices a house too low and creates a bidding war, it's like the same kind of concept there. But yeah, like people just have to, these investment banks just have to worry about, pricing it pretty, they don't mind pricing it a little low, but like obviously there will be the like it can be kind of like mishandled in different ways around the pricing. And sometimes you can actually get like the reverse effect where you price it too low and then the market is kind of worried about like why it's being priced low. They think they might miss something. And like, sometimes it is for a real reason that it's priced like, quote unquote low relative to like what they think maybe it should be priced. So there's a lot of levers, but basically like it's a ransom that like a distribution ransom that people pay Wall Street. Um, but there's a few tech companies. I actually think Slack did this where they just like went without investment bankers and they did basically like a private. They basically allowed their employees or anybody that owns stock to like just like own it, sell it out on the market, like release some of their own shares. If you can do that, you might see more of that as people are just like, you know what, we don't care. We're not going to pay the ransom. Like, certainly down the road, when and if Prospero goes public, and yeah, our general plan is not to sell to hold it for a long time. But you might consider something like that. Obviously, because we're like thinking about a crowd fund, and I think it's looking more and more like we're going to do that on Start Engine. So yeah, I think that that's the kind of thing that um, that I think is very important. That I think it's just like okay, you definitely have to look at this and say, is it even worth it anymore? And like the age of social media, where people, especially these companies, have like big distribution channels, like yeah, it becomes something that like definitely you're wondering, um, you're wondering if it's like even worth it anymore. And like, yeah, I think more and more we're going to see that.
I'm curious about if companies can even do anything in crypto in the future where they don't have to publicly IPO in the traditional way. I guess there's going to be laws about it, but
No, actually, there already are. Like, basically, they're cracking. I don't know if you know the difference, but like, there's like, there used to be like utility tokens and security tokens. And basically, like, utility tokens got around like laws and basically, like, basically the laws of like securities registrations. And obviously, security tokens, you can tell from the name, they don't get around those laws. And that's what kind of made it cheaper, easier, everything like that. And like, obviously, not having to like do things like disclose as much financials or go through a process. So, that's what made like all the crypto hucksters like very easy because like you have to get like very in-depth audits
mm,
to, issue a security. So yeah, it's definitely a different animal on that one. And so yeah, I would say that that's the big thing. Um and like I don't think that's going to change. I think they said that they felt like Bitcoin was like the only utility because like it's got to be like a real currency basically for them to think it's like a utility token. Um, so yeah, it's like it's definitely there might be some new ground, or they might find a way to like meet in the middle. Um, but yeah, it's definitely something that I wouldn't hope for a change. All right, it looks like it's model portfolio time.
yes.
And we're going to take a look at the market. Like people are going to see me like process this in real time because I haven't looked at the
Cool.
market. I looked at some pre-market stuff. So you're gonna get see how the sausage is made a little bit. And I will just do like you can see my screen, right?
Yep.
And I'm just gonna do like a stream of consciousness here. All right, let's take a look. Oh, Kaba's up. All right, here we go. First thing I'm gonna look at is like the model portfolio. Oh, that's nice. Some of my guys, although I'm a little upset that I dropped SMCI from my bonus picks this week. But yeah, this is looking pretty good, other than PDD. Um, but that's not. I'm not considering that on my drop list. I am definitely considering Shockwave Medical on my drop list. That one's been nothing but heartache and pain for me. But obviously, all these like very easily, I think of a lot of these as like long term holds. Like, but I love this. If you see this, all of this green, these are all in the model portfolio. So all the top ones, all the top green ones are my longs. Always like to see that. Um, so yeah, this is looking like I probably don't want to fiddle around too much, but I'm gonna look for some new names today. Xerox is. I was thinking about like closing one of my two. I'm 2x short Xerox, but like Shockwave, I'm gonna go take a look in Prospero because it's been one of the ones that I've just been wondering about. Um, so let's go. We're gonna go and check out what I have my whole watch list in Prospero. Um, so we're gonna go and do my favorites, which is just like I have all these in there, and then we're gonna find Shockwave. Let's take a look at it. And then option sentiment is, yeah, it's in a place. I don't like seeing that kind of lower high here, but that's the end. Let's see, 70. That's the first reading of the day. I'm not ready to give up on Shockwave. Let's just put it that way. It's like one of the reasons I'm not ready to give up on it is that like robust profitability and growth right there. Like 132 is a pretty good number, and like that's what we say of the down, like on the like anything above 120 we kind of like for that combo. So that's pretty healthy there. Upside breakout is a higher than downside breakout, so not ready to give up on that. And let's just go back. Let's see if there's anything like we're gonna read the news on PDD. Oh, and by the way, like I like as a company, like Webull is not to be trusted. I wouldn't invest with them, but it's just like it's kind of the best app for research. I hate to admit it. But credit where credit is due. I use it for like my base research. All right, well, open lower, and then I'm just gonna like scan the news. I'm basically seeing if there's anything like PDD, huge worry, like China shutting down. Like I'm looking for something like that. I know there was some negative news, but like I'm up a decent amount on this in the model portfolio. Oh, let's like, what am I even doing here? Let's check it in Prospero. Let's see the option sentiment. Um, Trying to have it in here. Oh, look at me. I didn't put all these in. All right. Now we're gonna add it to my watch list. Just doing so well, I felt like I didn't even need to check on it. All right, we're gonna put it in my favorites. That also has good profitability and growth. Okay, like 96 net option sentiment. That's on a good trend. Like, also not dropping. I know this is starting like very unexciting here. Um, just gonna take one more glance, make sure I'm not missing anything on this list. Confluent has just been disappointing to me. All right, Palantir, ENVX, all like looking like stars. Oh, I was thinking about dropping RMBS, but it's looking good. But maybe that's a good time to get out. We're gonna give it one more look. And don't worry, everyone. I'm not just gonna say I'm doing nothing. I will add at least one stock here. Um, oh yeah, look at this. I might I might check on RMBS one more time before this, because it is like, let me look at we're heading back up on upside breakout, heading down on downside. Yeah, I might get out of this just because I'm not overwhelmingly thrilled by it. But yeah, let's just take a look at some new names. And I'm gonna go into highs and lows. I'm gonna look at net option sentiment. This is what I do. Um, let's see, anything looking interesting now. Um, let's check out ACN. We're gonna look at this. Nice profitability there, higher upside, net option sentiment. Ooh, on a nice upswing. If everything checks out on this, we're gonna add it to our model portfolio. It's down a little. It's not enough to sway us. Any news, etc. Doesn't paraffin result. Web3. Oh, I don't know about that. Kind of not the right time to. Oh, the earnings are coming soon. Okay, this is an interesting thing here. We're gonna see they're trading near the price target. Let's look at, like, I do look at these technicals as just like an extra check. We might want to do it, and then again, we're going to see how the sausage is made. I'm literally just going to see, like, I'm going to go to Google, and I'm just going to say, will ACN beat earnings? And there we go. Earnings expected to grow. What to know ahead? We're going to read this article. Okay. Expected delivery area, blah 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 blah. Might help the stock. Let's see if they have, yeah, Zacks. We it's been lower over the last 30 days. We don't like that. Most accurate. All right, we're gonna read one more thing. Right now, it says ESP. It's saying that like a positive. Do you see where? Okay, a positive particularly. I'm failing to see where it says, oh, it carries a 3. So it's a hold. I'm not convinced. I'm not con ACN's lost me. If it was up a little bit today, like, I would be, I might just see like chip ranks too, just as an additional source. But yeah, oh, I don't like that. Oh no, it's been beating. Leave me alone, pop-ups. I don't want this. I hate how they just leave me alone. Okay. Um One day after percentage change. Yeah, I don't like to see that. We're seeing some negatives. I'm out on this. We're doing it. We're looking at a different name. I might be a liar here. I might not see anything I want to move on. But no, we're gonna we're gonna check out growth because we like growth right now. We think it's a good time for growth. So we're just gonna take a look at these big growth companies. Um, Nothing's really looking that great. And I'm just like what I'm scanning here is if upside breakout is bigger than downside breakout. Um, we'll do a different metric.
Is this what you do like every morning?
I wish I had time to do it every morning, but like this is what I do when I'm like thinking about what I want, like if I want to make a change.
Mhm.
Um, I've had my eye on like BlackRock for a little bit, but I'm worried about like some of the financial conditions. Let's check like the trending on this. That's actually not a bad net option sentiment trend. Like financial stocks run lower on, nobody tends to bet on them on options because they tend to be like dividend, profitability, social. We might add BlackRock, diversify a little bit. Let's go to Webull. Let's see what's going on with BlackRock because I've seen it pretty negative on upside on downside breakout even recently. So let's see what's going on here. Also down, and we're just like striking out here. But you'll see how I'm like rejecting these, and I don't like if it's down today. Like I can look at these a little bit more in terms of like, yeah, I don't mind that. Like, eh, it's looking pretty good in the technicals. Um, but I just don't like to see it down. We're gonna look at Sage Tracker. Ooh, that's pretty nice. A lot more buys than sells. I like to see that. Then the other thing I do is I go into most bought. I see who's buying. Um, oh, that's one of the names I look for. Rentec right there. Buying it at 688. It's trading at 691. I like that. DE Shaw Smart, 2 Sigma. All right, all right. We're gonna pull the trigger on this. We're gonna get it. We're gonna diversify a little bit. Let's just check the candles. I don't love those candles. Yeah, we're in some down candles now. Maybe a buying opportunity. Basically, I'm looking down here, like this graph. Like even nobody can see where I'm pointing, but basically, like these little. And this is yeah. I'm looking like down here where my mouse is. You basically want to like I have it set to the MACD. It's like actually not all that complicated. It's like a very visual graph. You see when the green is going down, that's obviously like a bad thing. And I want to like you basically want to see like the red reducing. That's like one of the things I look at just for like short term. We're gonna come back to that one. I think we'll probably buy it, but we don't want to buy it and we don't want to buy it in the down candles. All right, we're gonna go back here for a second. Um, oh, Confluent, good job. You've decided to suck less. All right, yeah, RVP, we like to see that. We were considering getting out of it, but we refused to admit defeat on RVP. But I also refuse to double up on that short. Um, just because I don't want to I don't want to like, and this is a good lesson, like stubbornly like chase something that just wants to go down. Like if I doubled up on this, yeah, I could make some profit back, but it keeps on shooting up. I'm basically jeopardizing my portfolio over this like thing that I'm just like not that confident in. And if you look at it, I mean, I do like the Prospero signals, don't like it, but this is basically what I'm talking about. We're looking at the weekly candles, right? It did go down from 5.17, but probably for good reason. But sometimes you're going to see some like retracement back up. And you do see on the weekly, you do see that like green candle. You do see definitely a reversal in this graph. But obviously, you've seen some reversals here, like, and then like it's more down. So we're going to keep our eye on this, hold at 1x, but nothing. Let's shop around. Like, I'm probably if I look for a short, I'll probably double up on one of my existing longs because I want to keep that ratio. Um, so let's see if we like any of the shorts. And I'm going to go back to, oh, we didn't see this. Let's look at this. Um, Peloton is just like, it's such a crappy company. I do like that. All right. We're going to look at Peloton. I mean, I can't do it. That 23 and 33 growth is just like 23 probability and 33 growth is just like nauseating. I can't even look at that. Um, mm, Etsy could be an interesting. I kind of like that it's like got solid profitability and growth. Let's take a look at Etsy. It's like not a traditional name that I like because it's like it's just barely higher, but like oh yeah. let's see, this could be something. We could short something and then grab Etsy and maybe also double up. Let's see. Let's look at what I'm looking at. Oh, I like that price target, like well above where it's trading now. We got some, yeah, yeah. We might. I think we can pull the trigger on that soon. Um, you know what? Maybe nah. We're gonna do it. Well, no, I'm gonna find my short first. I want to do this all at once, and I'll show you basically how I'm gonna record this and like print the values of like the quote unquote trade because I'm not necessarily trading all of these like literally. All right, let's see. I don't really. That's like I don't know what Mr. Cooper Group is. It's kind of like amuses me that name a little bit. Um, Ooh, this could be interesting. What's going on with you, MT? Let's look at it over here. Let's look at like kind of like the candles, the trends, and I really only look at this like for timing. Like I might come back to BlackRock um at some point. MT is down. All right, daily, it's like kind of an uptrend, but that kind of could be interesting because room execute probably blah blah blah. Steel producer. Okay, this is like something that might be overpriced. Yeah, people selling it more than buying it. Let's go in. Let's do this thing. We're gonna go like most. We're just gonna make sure smart people are. Oh, Rentec's buying it. Yeah, we don't want to do that. We don't like to bet against Rentec. They could have sold. It's possible they bought it at 27.40. So that means there was a good value there. Let's see if any smart people are selling it. Because that could be no one I consider particularly smart is selling it. So that scared me away a little bit on MT. I don't like to bet against Renaissance Technologies. They're probably the smartest hedge fund like for those that don't know what Renaissance Technologies are, they are they are like a quant hedge fund that's been around since um they've been around since the I want to say like 70s, and they just made like absolutely insane returns. They don't even take any money anymore. I don't believe. Oh, Chubb, I'm not going to bet it. It's too high a profitability. All right, so now we're going to do our little thing where we're going to look at the lows for net option sentiment. All right, ENV's been there for a little while. Oh, Melly, it used to be one of our darlings. Now it's gone the other way. Ooh, I was looking at this over the weekend. WD-40, 64 profitability. Ooh, I like this. I like some negative readings simultaneously. WDFC. This could be okay. Yeah, outside the buy zone. I like seeing all that. Oh, this above the. Oh God, the one thing I don't like. But you know what? It could be ready to turn around. I think I'm. I think I'm ready to like. I'm actually ready to pull the trigger on this trade here. Um. All right. Oh, things turn the other way a little bit on this market. Oh, but I like to see RVP down there. Okay, so I think I'm like basically I'm trying to keep a 2-to-1 ratio, just so you know. So I'm going to decide which of my longs I want to double up on. Um, and I think let's look at Meta. Let's look at how it's looking. And we're going to check it in Prospero. I think I'm gonna 2x on Meta. Yeah, look at that. That's beautiful. Um, so I'm going to 2x Meta. Buy Etsy, and it's getting near. I don't really care about that. All right. So I think that's what I'm going to do. And I'm just going to like screenshot them all at the same time. So you all believe of the price that I'm saying. All right. Let me just take one more look at Etsy, and then I'm just going to print this trade and take any questions. Oh, did you just, yeah. Well, now I don't want to really do, I might just, I think I might watch Etsy because it's going down and just like 2x on Meta and then get W WDFC. All right, we're doing that. All right, this is the price I'm grabbing WFC at. This is my Meta double up. We're going to keep an eye on Etsy, and we're also just like, so we know like the comparison to the SPY. We're screenshotting. I kept my promise. I updated my model portfolio maybe it wasn't glamorous, but you saw my process. Do we have any questions?
I don't see any questions currently, but that was awesome to see how your algorithm processes that.
Yeah, I did a live talk. I will watch Etsy throughout the day. I'm actually just going to write a little update to the people that weren't on this, so they know my model portfolio is updated. Share the screenshots, and yeah, if there's no questions, um, thanks for coming. Who came, and yeah, hopefully we might try and like we're recording this, so it might be a good thing to just like chop up and make some short form for that too, right?
Definitely.
For like maybe little like nuggets
hmm
of what would work for the process. All right. Well, thanks for coming, everyone.
Yep. Good seeing you, George. Good luck today, and we'll be back next week.
All right. Bye bye.